So this past weekend was the annual shareholder meeting of Berkshire Hathaway in Omaha, Nebraska. Now, if you're not familiar with the annual shareholders meeting, this is where all the stock owners or all the shareholders of Berkshire Hathaway meet at this big arena in Omaha, Nebraska to listen to Warren Buffett share the company's annual financial statements and also take questions. And this event is where you see a lot of the clips of Warren Buffett issuing his quotes and witticisms. All those are from this event that he hosts every year. For the longest time, he did it with Charlie Munger before he died. I think because of the quotes that have come out of this event from Warren Buffett, this is probably a very significant event to popular culture. I think it's very underrated from a pop culture standpoint. But anyway, I digress. This was probably the most significant annual shareholder meeting in a very long time, if not ever, for the company because of Warren Buffett's significant announcement. Now, I want to discuss that in this video, but I also want to discuss the company's current position. I want to discuss Warren Buffett's big announcement, his legacy a little bit, and also to talk about his successor. Not necessarily in that order, but that's what I want to discuss. So to start, you'll see in the chart that I have displayed that Berkshire Hathaway continued to be a net seller of stocks in Q1 of 2025. Not to the extent that they were in 2024, or at least not yet, but clearly Warren Buffett did not believe this was a buying opportunity yet. For equities at least. Now, it didn't grow by very much, but you'll see that Berkshire Hathaway now has a cash position of almost $350 billion, which if you're on Twitter, that's enough to buy 400 and some odd number of companies in the S&P 500. So almost 90% of S&P 500 companies have a market cap less than the cash position of Berkshire Hathaway. Now, Berkshire Hathaway is a $1 trillion company, so this is only a third of their position. Obviously, they own private companies, so they can't just sell those when they want. But in terms of their equity position, this is how much cash they have on the sidelines compared to being in equities. Now, given the way stocks fell in the first quarter, you would have thought that Warren Buffett would have been starting to buy the dip. He would have made some positions, but clearly he did not. As I would have not, because I think the panic of the last couple months has really been more about the tariffs and not about the economic data. So that's all I want to say on that. Let's move on to the next topic, which is Warren Buffett's big announcement. So he announced this Saturday that at the end of 2025, he will be stepping down and retiring as chairman of Berkshire Hathaway, and he handpicked his successor to be Greg Abel. So we'll talk more about him in a second, but let's listen to Warren Buffett make his announcement.
The time has arrived where Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and then give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then at the meeting following that, which will come in a few months, we'll take action on whatever the view is of the 11 directors. I think they'll be unanimously in favor of it, and that would mean that at year end, Greg would be the chief executive officer of Berkshire, and I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said in operations.
Now, obviously, this is a very big deal because in Berkshire's entire history since Warren Buffett took it over in the 1960s, there has never been a change in leadership at any point. And this has been entirely Warren Buffett's investing philosophy the entire time. Now, obviously, he's had people to lean on, but I mean, he's had the final say on all capital decisions for the last 60 plus years. So the fact that there's going to be a change at the head of the person who makes those decisions, that's a very, very big deal. Now, for those of you who aren't familiar with Greg is a Canadian, so if you're a Canadian who hates the US, just know that the best financial investing institution, or the highest performing one, is going to be headed by one of your own, so take that for what it is. He's from Alberta, went to the University of Alberta, and then he joined PricewaterhouseCoopers, a Big Four firm in public accounting, and then he joined an energy firm, which eventually was acquired by Berkshire Hathaway, and with Warren Buffett at the helm and his leadership, they built the energy division at Berkshire Hathaway into one of the largest and one of the greatest utility companies in the sector. So he's had the chance to work with with Warren Buffett directly for the last 20 plus years. And even at that point, Greg was already into year 20 of his career. So he had a lot of professional experience before Warren Buffett, has plenty of experience working with Warren Buffett, and now he's going to be heading the company entirely without Warren Buffett or Charlie at his side. Now, Warren Buffett said he's still going to stick around, but he is 95. So I'm not sure how much Warren Buffett you're really going to be able to lean on in making these kind of decisions. And what's crazy is, like, you know, we don't know anything about Greg Abel's investing philosophy besides some of his comments he's made at the annual shareholders meetings. We don't know if anyone else was in the running for this. Like, I remember reading an article like 10 to 15 years ago about how Warren Buffett apparently wanted his son to succeed him, but we never really heard anything about that after that. And obviously the board of directors still has to approve this, but as Warren Buffett said, that he's pretty confident that the board will unanimously accept his decision. Now, one of the things I do applaud, and this doesn't always get discussed, or maybe people typically hate on this sort of practice, but this was obviously not a public discussion. I mean, Greg didn't even know that Warren was going to recommend him to become the next CEO of Berkshire Hathaway. Like, it was that level of secrecy. I tend to like that, though. I like when these decisions aren't public. I mean, I'd rather the board like sort of hash that out publicly, but I'd rather like the recommendation come without a lot of public input. I think when you have a leader like Warren, who is so trusted by everyone involved, that you really want somebody who is his choice. Like, I went to Purdue University, and when Mitch Daniels stepped down as president, he did the exact same thing. He handpicked somebody himself privately and then announced he was going to retire, while also announcing his successor, who will be then vetted by the board of directors. I like that way of handling it. You want to retire, but you sort of relieve the anxiety of not knowing who the leader is going to be by providing someone, but you also didn't want to let anyone know before that you're retiring. And I think the process, it's a lot easier for someone to vet people when it's done with space and privacy versus these public displays. And the public still I guess I shouldn't say the public, but like the board of directors still gets to add their input through their approval process. So that will happen. He'll be selected, or I doubt that he won't. But anyway, he'll become the new CEO of Berkshire Hathaway. But my next question is as well, we don't know how the philosophy of Berkshire Hathaway is going to change. There's a lot of question marks there, but I assume that it's probably not going to change. If it does, it'll be very non-noticeable differences. But Greg is 62, so it's not like he's this super young guy. And I think, you know, being a CEO of a company this caliber, like, I mean, Berkshire Hathaway is a top 10 company in the world in terms of market cap. I think you need someone who really has that amount of experience to be in charge, and to be able to have the firm leadership to keep this ship steady. But with that said, you know, we don't know about, like, does Greg want to retire? How long does he want to do this? Is he like Warren? Does he want to work until he's dead? Like, we just don't know. Like, let's say Greg wants to do this, but he only wants to do it for like 10 years. Well, most of Berkshire Hathaway's investments, they have horizons that are longer than 10 years. And it's not so much about like we have an exact time horizon, but it's like, this is the philosophy of the company. This is the philosophy we adopted going into this investment, and we're going to keep this investment until this philosophy changes. Like, that requires stability and leadership to keep constant. So let's say Greg wants to work for 10 years and retire. Are you just going to start this cycle of CEOs that just work for 10 years and retire? Like, I feel like the biggest strength of Berkshire Hathaway has been its stability at the top. Not just the genius of Warren Buffett, but it's the fact that so many of the people that work at Berkshire Hathaway stay there. So, you know, there's a lot of question marks here about what could happen. I mean, I like Greg, I like the pick, I like the fact that he's got experience before Warren and with Warren, but that's something I want to know from the board of directors when they interview him. Like, let's figure that out. Because, like I said, the biggest thing here is stability. So I would like him to be CEO for like maybe 15 to 20 years. That would make me feel more comfortable. I know he's not going to make a commitment to it, but like, that's what I would be looking for, though. I would want to get vibes like that he's committed to do this for a very long time and not just 10 years. So regardless of my curiosity, I still think he's going to be great. We'll see how the rest of this goes. Hats off to Warren Buffett. You've had a great career. And just to sort of commemorate his success, I mean, this is overall gain from 1964 to 2024, 5,502,284% total return. Average annual return, 19.9% versus the S&P 500's 39,000 and 10.4%. Although I will say, Warren Buffett doesn't like tech companies, and the S&P 500 is increasingly becoming tech companies, and they grow much faster. They have much higher ceilings. They're much more efficient because they don't rely on so many physical assets. So they tend to grow a lot quicker in value. and they're much more highly valued as a result. So the annual return of the S&P 500 may actually catch up to Warren at some point, or Berkshire Hathaway, I should say. And I also saw a stat that said that if Warren Buffett hadn't bought Apple, he wouldn't have beat the S&P 500. I checked with ChatGPT, who said that wasn't true, so that's sort of debunked. But what ChatGPT did say was that instead of Warren Buffett's annual return being 19.9%, his annual, had he not bought Apple, his annual return would have been only 19.3%. So somewhat noticeable. But I want to finish off this video now by commenting on one of the things that Warren Buffett said during his annual shareholders meeting, and that he's really concerned about the investing world becoming less about the art form of investing, and I'm paraphrasing, but it's trending to become more of a casino. And that commentary really speaks to the trend of investing more broadly away from value investing, which is risky, unpredictable, but when you have somebody who's brilliant like Warren Buffett, it works. But it's shifting into more to, yes, the casino, but really it's into more predictable, either increasing revenue or into more predictable investments like indexing. Like most investing houses now don't have value investors. It's not about value anymore. It's all about indexing and collecting fees. So it's like you're an investing house, you're a firm, and you want to make an investing product, so you find some sort of niche within investing in which to bundle up companies, put them in your fund, sell your fund, have people buy into it, and you collect fees on that. Like you collect fees for, quote, managing the fund. And really what this speaks to is there's a quote out there from an investor, I can't remember who said it, but he said that, and I'm paraphrasing once again, people won't pay more than $3 for a hamburger, but they'll pay at least $5,000 for an investment, regardless of their financial situation. And that is just so true when it comes to investing. Like, people want to go all in immediately. They don't ever think through the investment. They just think about how much they're going to earn from it. And it's this very like primal, like animal-like response to just dive into something like that. And all the focus of investing has, like I said, been on indexing or trying to sort of capture that instinctive reaction to investing. And so all of these like apps and websites that have come out to reimagine investing, I want to name names, but they've gone all in on the strategy of like, let's go for the extremely high risk, not high risk to them, by the way, but like extremely risky customer products that make us a ton of money. Like, for example, option. You never notice Warren Buffett using options. Ray Dalio, Bill Ackman, Ken Griffith, like none of those guys have ever used options. Well, I think one of those guys has, but don't quote me on that. But like options, like yes, you can get 2 to 3x return in one trade, but the probability of success is increasingly low. And not only that, but options are designed to expire worthless. Like no matter what the odds are of a stock or an index going a certain direction, like the whole point is like you lose all your money. That's the point of options. That's how option houses make money. That's initially how Carl Icahn made his money, not by investing in options, but by owning an options house where he would then take all of people's money because they would do stupid things and lose all their money on options. So like there's all these investment products out there that are now being sold to consumers with no barriers to entry, and it's just sucking people dry. It's the same thing with sports gambling. It may seem like you're gonna win, but these products are designed to make investing a casino, and in casinos, the house always wins. That is the unfortunate part of investing now. Indexing, which is not really brilliant, it's all about fees, and the casino, the gambling houses, the different option strategies, like those kind of products, leverage, margin accounts, crap like that. And you think I'm wrong, but like BlackRock, okay, the largest financial institution in the world in terms of assets under management, Larry Fink, the CEO, has a political science degree from a liberal arts college. Now, I'm not trying to diss on small liberal arts schools, but you understand my point that like investing now is much more about selling your product to investors than it is about building a valuable product. Larry Fink has done a really good job of hiring the best risk people in the world to find the lowest risk index funds, mutual funds, money market funds, and then market those to all these people that offer 401k accounts. Like that has been the brilliance of BlackRock, is just making their product the most sold among all 401k products. Now, there's really no genius investing mind there. He's a salesman. That's all BlackRock is they sell their products to investors, which is unfortunate. And it's the same with Robinhood. I like that Robinhood's mission is to bring investing to the masses, but I don't like their approach. I wish someone would design an app or a brokerage house that rewards people like Warren. It's sort of like those apps that claim to like make your phone minimalistic, like it's all black and white. There's no fancy icons or colors to get in your face and distract you. Like it's very minimal, and it rewards you for doing the things that have the highest chance of success, like buying things at low PE ratios but high high growth rates. Like, I feel like there's a couple key things that you can use to signify that things are undervalued versus overvalued, and you can build an experience, an investing app experience that builds on those things that have been done time and time again. And I feel like with AI, that would definitely be possible. So if you're out there, you're a coder, you're an entrepreneur, go for it. That would be the greatest thing in the world. I'm not a coder, and I have no aspiration to be. So I definitely would be interested in someone doing something like that. So just to end the video here, Warren Buffett, you've had a crazy career. I wish I could be you, although I'm way behind you already, even though I'm still in my 20s. But hats off to you, man. Thank you so much for what you've done and for all of us, not just in the investing world, but also so much of the life advice and the quotes you provided over the years. Could not thank you enough. So as always, there's always more to discuss. So please leave your questions in the comments. Hopefully we'll get to those in another video. For now, I'm going to end it here. Thanks for watching. Have a good day. We'll see you in the next video.